Welcome back to the Malaysia Money Matters show. It's the 14th of May, 2025. Today, we're diving straight into what's moving the Malaysian markets and economy. We've got significant company developments, big international headlines, all impacting, our financial landscape. Let's get right to it.
Sounds good. Yeah, there's certainly a lot happening, and it's all connected in some pretty interesting ways.
Okay, let's kick off with Malaysian company news. First up, a potentially, game-changing development in Sarawak. Premier Tan Sri Abang Johari Tun Open, or Abang Jo, has indicated an agreement between Petronas and Petroleum Sarawak. It's just around the corner. We're expecting an announcement, tomorrow probably?
Yeah, it sounds like May 15th,
Yeah.
and the key thing seems to be Petroleum Sarawak becoming the sole gas aggregator there.
Exactly. Sole aggregator status. And Sarawak is also set to increase its stake in LNG through a commercial deal.
This could really reshape the energy scene in Sarawak. I mean, being the sole aggregator gives them huge control over gas distribution and sales within the state. And for Sarawak itself, more LNG stake, more control. It's a potential major boost for their economy, letting them benefit more directly from their own resources.
Makes sense.
We'll also need to watch how this affects Petronas, their operations, their relationship with the state going forward.
And there was mention of speeding up energy supply to ASEAN countries, too.
Yes, that suggests a wider regional strategy is also in play here. It's not just domestic.
Okay. Now, staying with potential shifts, let's talk about the glove sector. The U.S.-China trade situation. It's creating some interesting dynamics. The U.S. is cutting tariffs on a lot of Chinese imports for 90 days, starting yesterday, and China's lowering tariffs, too. But analysts think this might actually be a negative for Malaysian glove makers.
Well, yeah, the core issue boils down to price competitiveness, doesn't it?
Yeah.
The U.S. tariff cut on Chinese goods from 145% down to 30% in many cases sounds big, but the exact impact on gloves specifically is, it's a little bit fuzzy.
Fuzzy how?
Because you've got existing U.S. tariffs plus planned future increases. So Hong Leong Investment Bank reckons it might end up being around an 80% tariff on Chinese nitrile gloves.
Still higher than Malaysian ones, then?
Yes, still more expensive than Malaysian or Thai gloves. But the worry is more around vinyl gloves.
Oh, okay.
Chinese vinyl gloves already have a huge chunk of the U.S. market, like 70–75%. If they get even cheaper with these tariff cuts, it could stop buyers from switching over to nitrile gloves, which is what our Malaysian producers mostly make.
Right, hindering that potential shift.
Exactly. And it might ramp up competition in other markets, too, like Europe, as Chinese makers look elsewhere.
So investment banks are divided. HLIB downgraded the sector, but liked Kossan. Maybank went negative. CIMB neutral.
Yeah, it really shows the uncertainty. Delayed orders, maybe more supply coming online from Chinese plants in Southeast Asia later. It's a tricky picture for the glove sector right now.
Okay, let's switch to palm oil. MPOB's April numbers are out. Exports are up. Production jumped quite a bit.
A big jump, over 21% for CPO production.
But CPO stocks also surged, up nearly 35%. And total palm oil inventories are up almost 20%.
Right. And Glenaki Economics thinks global output will stay high in May. Now the monsoon's over. They do expect Malaysian exports to pick up, though, mainly because of demand recovery from buyers like India.
Because our palm oil is cheaper than soy oil.
Precisely. That price discount is a key advantage. But the flip side is those rising stock levels. If production keeps climbing like it did in April, apparently Sarawak had its best yield since 2011, and exports don't accelerate enough, those stocks could pressure prices downwards.
So production up, demand recovering. But stocks are the thing to watch.
Definitely. It's a balancing act.
Okay, slightly different angle now. Kananga Investment Bank sees a potential upside for our construction and utility sectors, linked to AI chips.
Yeah, it sounds a bit indirect, but the thinking is, if the U.S. maybe rolls back some of those export restrictions on advanced AI chips.
The Biden-era ones.
Exactly. If those ease up, it could make Malaysia even more attractive for building data centers.
Ah, I see. And data centers mean construction work.
Lots of it. Kananga notes positive signs already, like Pearl Computing buying land from Gamuda down in Port Dickson for a data center, including R1 billion in infrastructure work.
Wow, okay.
And of course, data centers use a ton of power. So the utility sector, particularly Tenaga Nasional, stands to benefit significantly from increased demand. They've already got capacity coming online for data centers, with more planned.
So global tech policy potentially driving local construction and power demand. Interesting link.
Very interconnected.
Now for some company earnings updates. DKSH had a strong first quarter for 2025.
Yes, second highest quarterly profit ever for them, apparently. Revenue hit a record too, driven by consumer goods and healthcare.
What drove the profit? Higher revenue, cost savings. Favorable forex, too.
Seems like a combination of all three. Good operational performance.
But they flagged some concerns.
They did. Worries about global trade policies, potential changes to domestic subsidies affecting costs, the usual external risks. But overall, strong momentum for DKSH.
And CGS International is bullish on Duopharma.
Very much so. They're expecting strong Q1 profit growth, potentially 24% to 63% year-on-year, mainly thanks to those APPL contracts.
The approved products purchase list ones.
That's right. They see Pharmaniaga's recent good results from ATPL as a positive sign for Duopharma too.
Yeah.
They're projecting around 40% full-year earnings growth and kept their buy call.
So government contracts driving growth there.
Seems to be the key factor, yes.
Okay, let's talk about the broader market. Bursa Malaysia surged on Tuesday, hitting a 2-month high. Was that mostly down to the U.S.-China news?
Absolutely. That surprise tariff de-escalation really injected a shot of optimism. You saw big gains in tech, energy, construction, sectors sensitive to trade and global growth.
And foreign investors kept buying.
Yep, third straight week of net inflows. CIMB sees it as positive for investor confidence, good for global chip demand, benefiting players like NARI, MPI, and maybe banks with strong domestic focus.
Though HLIB was still cautious on gloves, as we discussed.
Right. And Mandivam noted it might be a short-term risk-on mood, suggesting a more defensive domestic focus might be better longer-term, given trade risks haven't vanished completely.
So a definite boost, but maybe some caution about how long it lasts.
That seems to be the consensus. Enjoy the rally, but keep an eye on the bigger picture.
Right. Moving to some company-specific legal news, Kerjaya Prospect won an adjudication award against Young Thai.
Yeah, about RM 75.5 million relating to the Apple project dispute in Malacca. Young Thai has to pay up, plus interest, according to the adjudicator.
Young Thai confirmed it, but they're seeking legal advice.
They did. They noted the award was less than Kerjaya claimed, and they think the sum is already accounted for anyway. Plus, there's still a separate lawsuit ongoing, so maybe not completely settled yet.
Okay, contract wins now. Keyfield secured one from Petronas Karagali.
Yes, a 7-month contract, plus a potential 2-month extension for an accommodation workboat for offshore activities. Value wasn't disclosed, but Keyfield's been doing well.
Doubled their profit last year, right? Fleet expansion, better rates.
Exactly. So this adds to that positive momentum in the offshore sector for them.
And USMA also bagged a Petronas Karagali contract.
Pretty significant one. 3 years for non-rig assisted electric wireline logging services out in East Malaysia. Runs from March this year to March 2028.
So a nice long-term revenue stream for USMA.
Definitely provides good visibility for their services division.
Last one on the company front. Mobile stake in Digital National, DNB, it's being transferred.
As U-Mobile focuses on rolling out its own second 5G network, its shares in DNB are being taken over by Celcondigi, Max's, YTL Power, and the MOF Inc.
For just the nominal value, RM100,000.
Seems so. It basically just finalizes that revised DNB shareholding structure under the dual network model. MOF Inc. stake goes up a bit, as do the others slightly.
Okay, got it. Let's shift to the international stage now. And the big headline grabber, as we mentioned, is that U.S.-China trade truce.
Absolutely. That temporary slashing of tariffs for 90 days, it really came out of the blue after those Geneva talks.
U.S. tariffs on most Chinese goods down from 145% to 30%. China's down from 125% to 10% on U.S. goods. That's huge.
It is. And the markets reacted instantly. Asian, European equities surged. Wall Street rebounded. There's a sense, even if temporary, that both sides stepped back from the brink.
JP Morgan even dropped its U.S. recession call for 2025 because of it.
They did, and boosted their U.S. growth forecast. Though interestingly, traders actually lowered their bets on Fed rate cuts for 2025 after the news, now only pricing in 2 cuts.
Any other details from the deal?
Well, the U.S. is also cutting that low-value de minimis tariff on China shipments, and apparently China lifted its ban on Boeing plane deliveries, so some concrete actions alongside the tariff cut.
It's significant de-escalation then, boosting sentiment globally.
For now, yes. The 90-day clock is ticking, but it's a definite reprieve.
Okay, also in the U.S., April inflation data came in a bit softer than expected.
Yeah, core CPI up only 0.2%. That's the 3rd month running it's been softer than forecast.
Did the tariff show up in prices, like cars or clothes?
Apparently not much yet. Suggests maybe importers absorbed costs, or the goods arrived before tariffs really bit. Also, some weakness in services suggests consumers might be cutting back on discretionary spending.
And this helps the case for Fed rate cuts.
It certainly supports bets on at least 2 cuts this year. Lower grocery prices helped, though shelter costs picked up a bit.
Good news for inflation watchers, then. Elsewhere, India's inflation also slowed.
Significantly, down to 3.16% in April, lowest in nearly 6 years, and below their central bank's target for 3 months straight, mainly due to slower food price rises.
Giving the Reserve Bank of India room to cut rates.
Exactly. More flexibility for them to potentially ease policy and support growth.
Quick mention, Chinese solar stocks jumped on reports of potential output cuts.
Yeah, talk of a major firm coordinating with peers to cut production to prop up prices hit by oversupply. Classic industry response to try and stabilize a struggling market.
And across Asia-Pacific, governments are getting tougher on social media.
Seems to be a trend. Australia, New Zealand, Indonesia, Malaysia with licensing, Singapore, Vietnam, Pakistan, all looking at tighter regulations, especially around protecting kids online.
More compliance hurdles for the tech giants, then.
Definitely. Increased regulatory burden across the region.
Closer to home, HSBC revised its forecast for the ringgit.
They did. They now see it strengthening to 4.20 against the U.S. dollar by year-end, up from 4.45 previously.
Why the change?
They cited heightened external volatility actually favoring the ringgit, plus things like repatriation of earnings by GLCs and GLICs, slower FX buying by residents, and a sort of broader de-dollarization trend.
A stronger ringgit would be welcome news for importers.
And for managing foreign debt, absolutely. Signals some confidence, too.
What about our own interest rates? Moody's has a view on BNM.
Moody's Analytics expects Bank Negara to hold the OPR at 3% probably until August. They see a potential 25 basis point cut in September.
But that depends
on inflation staying below 3% after the RN95 targeted subsidy kicks in, and also on the U.S. Fed actually starting its own rate cuts. They think BNM's recent SSR cut bought them some time to assess things.
So domestic inflation post-subsidy and the Fed's moves are the key things BNM will be watching.
Seems to be Moody's read on it, yes.
And finally, internationally, Malaysia and Russia are looking to boost ties.
Yeah, during the PM's visit, exploring ways to enhance trade and investment, make transactions easier. Trade's apparently been rising despite challenges.
Deepening ASEAN-Russia ties is also on the agenda for Malaysia's chairmanship next week.
Right. Diversifying trade partners, looking for collaborations in tech and other areas.
Okay, just briefly on political news. The targeted R95 subsidy, any updates?
The Deputy Economy Minister basically said the government will consider the current economic situation when deciding on implementation. It needs careful cabinet evaluation.
Still expected mid-2025, possibly using MyCAD for a 2-tier system?
That seems to be the plan they're working towards, yes. But the timing and exact mechanism are still being finalized, considering the potential impact on households and inflation.
Right, a big one to watch. Okay, so wrapping up, looking back at everything, what stands out as the most exciting news today?
Oh, it has to be that U.S.-China agreement to slash trade tariffs, doesn't it?
Yeah, I think so too. It was unexpected, and the impact on markets, including Bursa Malaysia, was immediate and positive.
Exactly. The potential for less friction between the world's 2 biggest economies. I mean, that has huge implications for global trade, supply chains, economic growth.
And potential benefits for Malaysian companies beyond just the chip sector we talked about earlier.
Absolutely. Now, it's only for 90 days, so there's still that element of uncertainty. We don't know if it's a real turning point or just a pause.
True, it's temporary for now.
But just the willingness of both sides to step back like this, it offers a significant, glimmer of hope for a bit more stability in the global economy. That feels like the biggest deal today.
Agreed. A welcome development, even with the caveats. Well, that brings us to the end of our deep dive for today. We've covered quite a bit, from that Sarawak gas deal and glove sector worries to company earnings, international trade shifts like the U.S.-China truce, and policy moves like the fuel subsidy.
A lot happening, for sure.
Absolutely. So if you found this analysis valuable and you want to stay on top of the latest money matters in Malaysia and, importantly, how they might impact you, make sure you subscribe to the Malaysia Money Matters podcast. We'll keep breaking down the news, keeping it clear, concise, and relevant for you.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. by subscribing to the Malaysia Money Matters newsletter. You will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.